India's economic growth has been a story of highs and lows. The country's economy has faced a series of challenges over the years. Just before the pandemic hit in 2020, India's growth had already slowed to below 4%. And then, COVID struck, making things even worse. Looking back to the global financial crisis of 2008, we can see that India has faced several challenges since then. From 2011-12 onward, the economy struggled with various issues. First, the twin balance sheet problem emerged, where banks were burdened by rising non-performing assets, and some companies were over-leveraged and unable to meet their debt obligations. And by 2017, these issues were further compounded by troubles in the non-bank finance companies and the real estate sector, adding even more pressure to the economy. Consequently, as the pandemic approached, India faced declining exports, soaring unemployment at a 45-year high, stalling consumption, rising poverty, and a manufacturing sector that had shrunk significantly since 2016. The pandemic added high inflation to this mix, fueled further by global events like Russia's invasion of Ukraine. Economists expected India's economy to grow by only 4.7% in 2023, which is a lower growth rate compared to previous years, mainly because of challenges like slowing growth, high unemployment, and falling exports. Despite these challenges, India remains a favorite among global investors. Why? In part, it's due to the economic struggles of major economies like the US and UK, which are facing recessions. But it's not just a matter of relative performance, there is a genuine optimism about India's potential. According to a recent report by Morgan Stanley, India's GDP is expected to more than double by 2031, surpassing $7.5 trillion. This would make India the world's third largest economy. Many global leaders and analysts are very optimistic about India's economic growth. J.P. Morgan's Managing Director of Asia-Pacific Equity Research, James Sullivan, predicts that India could see around $100 billion in investments in the coming years, making it a key focus for long-term growth. John Chambers, Chairman Emeritus of Cisco, also believes in India's bright future. He predicts that by the end of the century, India's economy could be 90 to 100% larger than China's, and 30 to 40% bigger than the US. He suggests that India may become the second largest economy within the next 30-40 years, growing faster than anyone expected. This optimism is driven by factors like offshoring, India becoming both the office and factory to the world, digitalization, through initiatives like India Stack, and an energy transition towards renewables. India's government has also introduced business-friendly reforms, attracting foreign investment and boosting global investor confidence. Another factor is that companies are shifting manufacturing from China to India, leveraging its labor force and improving infrastructure. The report of Morgan Stanley also highlights four trends: demographics, digitalization, decarbonization, and deglobalization, that are setting the stage for India's growth. One of the exciting implications of becoming the third largest economy is the expected rise in per capita income from $2,278 now to $5,242 by 2031. This change could trigger a boom in discretionary spending. Moreover, the number of households earning over $35,000 a year is projected to increase fivefold, reaching over 25 million in the next decade. This paints a hopeful picture of India's future, with a young workforce, advanced technology, and busy marketplaces driving growth. Despite challenges and amid geopolitical uncertainties and relatively restrictive monetary policies, global economic activity slowed to 2.6% in 2023. However, India showed extraordinary resilience against challenging external conditions and grew at an impressive 8.2% in FY24, making it the fastest-growing major economy in the world, according to the latest India Development Update by the World Bank. This further highlights India's potential for growth, despite external pressures, and strengthens the case for why global investors remain optimistic about the country's future.